Hey guys, welcome to Market Mondays. Hopefully you guys had a great weekend. We're going to give you guys a quick update over the last week, especially what the Fed is doing, the Fed funds rate. But before I get right into it, I'm going to do a quick dad joke. Dad joke today is a mummy covered in chocolate and nuts has been discovered in Egypt. Archaeologists believe it may be a Pharaoh Roche. Get it? All right, so getting right into it. Last week, the Fed made an announcement that they were not going to raise the Fed funds rate or lower it. They're just going to keep it the same. Now, this was kind of expected because of the jobs report that came in the beginning of the week or beginning of the month, showing that there wasn't any weakness to the labor market and inflation hasn't really gone toward the direction that they hope it would go. So I'm not surprised that they changed it. We talked about this the Monday before last week that they probably aren't going to change the Fed funds rate based on those two things. So we don't know how it's going to go in, how they meet this month and what they're going to, or sorry, they already met this month, what they're going to do for August. But right now they're not changing anything with the Fed funds rate at all. Now, one of the things I want to get into is kind of talking about the Fed funds rate and its relationship to mortgage rates specifically. So if we take a look at this chart, what we have in here is the green line is how mortgage rates have been behaving, and the blue line is how the Fed funds rate has changed. So we had a change in the Fed funds rate at the end of September last year, and we've had a few cuts since then. But if you notice when these cuts happen, you notice that mortgage rates didn't exactly behave the way that everyone thinks it does. I knew that it wasn't going to have a huge impact, and we also see mortgage rates hit its best in September, pretty much like leading up until the first Fed cut of last year. And then all the times after that, mortgage rates actually kind of went up a little bit, almost by a percent, and then slowly have tapered off. And these are based on the average mortgage rate for conventional rates. VA and FHA and the USD are about 0.5% lower, but either way, you can still see that the trend is the same. And every time they had a change in the Fed funds rate where it lowered, we see that it still did its own thing. It wasn't anything related. So that kind of just more evidence as to the Fed funds rate versus the mortgage rates. They're not directly in line with each other. They have an influence, but just because the Fed funds rate is going to go down, mortgage rates aren't going to go down. So this is a prime example of them happening in the opposite direction. Sometimes it works out where they're both behaving the same way, but most times this is what we expect to see. Typically, if the Fed funds rate goes down, mortgage rates typically don't do anything at all. If not, sometimes they get worse. It just depends on how each of them interact independently. So wanted to kind of shine a light on that. Now, the big news this week is the inflation reports. There's two of them tomorrow and Wednesday. We are not expecting a lot of improvement with inflation going into the month of July. So we're just because what numbers are being replaced for the new numbers, we're not expecting those numbers to change a lot. And in fact, they're actually expecting mortgage rates to actually inflation to go up a little bit because of what all the replacements that are going to happen. But with how mortgage rates have been behaving over the last, really since the beginning of July, we saw the nice dip in the beginning of July, and then things have gone up since. This was all the start of the jobs report where we saw the unemployment rate go down. So since then, rates have been kind of creeping up a little bit, not by a huge amount. We went from again, it wasn't very much in regards to how much it's changed. Maybe this is a 0.25%, maybe roughly around there. So we're basically back into the mid sixes for VA rates, and conventional rates were in the high sixes is where we're at. So you can kind of see where the numbers are at here. Otherwise, the next thing that we want to bring up is the change there's a bill that a Georgia Congress lady is trying to push out. Essentially, she's trying to get rid of the capital gains taxes on the sale of homes. This doesn't impact home investors. This is more people who have met the home requirements in regards to get the capital gains tax. So if you guys don't know, it's as long as you live in the house 2 out of the last 5 years, you can get capital gains exemption up to $250,000 tax-free profits. Double that if you're married, but if you make more than that, you're taxed on whatever's above. So it sounds like they're trying to do away with that because this law was put in 1997. So they're looking to update it a little bit, especially now there's some people who are making well above that, even when they're married. So that is just a proposal. It's not been officially signed. It's not real yet, but it is something they're trying to put out there. So otherwise, that's all I got for you guys today. Hopefully you guys have a great week. Nuke out.